right, guys, welcome to Slap That Ask. We're going to have a casual conversation about certain topics in the market. I'm really excited. Hopefully you're really excited. So let's introduce our panel members. We've got Exiled, Redemption, Millennial, and me. So I'm Martina Rita. I invest for a living and live in Airbnbs. I have a background in finance. I'm really interested in more the qualitative kind of investing, even though I have a traditional kind of pricing theory background. But let's put it over to Millennial. Let him introduce himself.
How's it going, guys? I am a digital marketer by trade. I am in the market all day with these yahoos, but I like long equity, I like bio, and I like trading in dog shit, as people like to say, so... Yeah, that's me. Redemption?
Hi guys, I'm Redemption. I'm an ex-firm trader. I didn't get kicked out because I lost money. I got kicked out for politics, but I look like a hobo in this because of quarantine and because of the other jobs I do. I'm probably the least accomplished amongst everybody here, but my specialty is basically in looking for flaws and certain inaccuracies and things. And like Millennial, I like to basically buy what's Rita considers as dog turds and turn them into gold.
Are we all going to focus on the dog turds? Fine. Next.
Makes money.
And I'm Exiled, or Stu, and I'm a long-term investor with a background in marketing and construction, and I've been investing for around 18 years, and I like to do it long.
Nice. All right, guys. So today we're going to talk about a couple topics. First up is Christmas time. What do we think is going to happen going into Q4 and into Q1? Maybe I'll go to... Who wants to answer first? Okay, I'll go. You know that awkward moment when you're in the teacher's class and everyone's like, please answer? All right. So I was looking at it last night and trying to kind of think macroeconomically what was going to happen. And I'm kind of concerned because we've already had like a huge surge, and usually into December, the end of December, into where we actually turn over from calendar instead of financial quarters. We usually see what's called a Santa rally. It's one of the most famous effects, seasonal effects of the stock market. And usually when the stock market continues up so much as it has before that time, it's kind of a muted rally. So that's kind of what I was thinking about going into Q4 and Q1. But as you know, I'm a long-term investor. So for me, it's just kind of like... I mean, Q4, Q1, who knows what's going to happen? It's fine. If I think about like how people invest when they have kind of a portfolio to manage, they rotate instead. And so I'm probably just going to keep the current rotation that I have, completely long stocks. I am looking to probably hedge out with Bitcoin, but we'll talk about that later. Any other thoughts on Christmas, or maybe what you guys see for the calendar switch?
Yeah, I mean, Christmas for me is just looking to be a bit of a shit show. Everything's going on layaway. MasterCard and Visa are just like geared up and ready to go, and everybody knows another stimulus in the U.S. is coming. That in the second wave, people are just going to start spending because we've got that stimulus package on the way, so it's okay to spend now, to pay off your credit cards later. It's just like the people that went in and took loans, and people that went and spent like crazy the first time we were waiting on a stimulus package, and it's like, okay, well, I think we're just going to see more of that. As far as like the retail sector that's been reeling a little bit, I think we're kind of in a good place for them. Everybody's had to shift over to e-commerce, so I'm pretty bullish on the retail sector in and through Christmas. But
still got that cough.
I mean, Yeah, the cop is still there, but I honestly think there's a lot of opportunity for the Christmas season as far as the retail sector goes, for sure.
Yeah, I think you've got to look at the consumer mindset as well, in terms of how optimistic are people right now at the consumer level for carrying a little higher debt going into Christmas and stuff like that. And I think maybe, just maybe, there's a slight little glimmer of we're going to be okay starting to emerge. But it's without a doubt going to transition to... my prediction is basically this is going to be the biggest e-commerce Christmas period ever in terms of revenues. And I think it's all the big names that stand to gain from it, the Amazons, the Walmarts, the Best Buys, and basically any independents. I'll use like BH Photo Video as the example, that have kind of led the way in e-commerce thus far, at least. The ones that have adapted late are generally, I think, going to get an ass kicking. So.
Who do you think is adapting late?
Who's adapting late? I think a lot of smaller businesses that are just now transitioning to online sales, the stuff that is maybe not traditional stuff, so restaurants and things like that, as well as retail, that are kind of late to the party. Small town Midwest is how I'm thinking here, because that's where I live, and I think they kind of missed that opportunity to make their mistakes in trading online and taking bookings and reservations, as well as selling products online. And that stuff takes a while to get set up and running smoothly, and, you know, adapting an inventory system and stuff like that. So I could give you a bunch of local examples where they've just tried to stay relevant online, and usually the best way for them to do it, that I see working, is like they're just selling on their Facebook pages and stuff rather than having a dedicated e-commerce platform, and they're just not doing that well. So it's the ones that had already been there and had that little bit of time to, you know, iron out the kinks. I think they'll do a lot better at the local level. But Q4 going into Q1, my big concern surrounds commercial real estate, and I think that's led by the chance for smaller retailers to go under if they don't get that Q4 revenue and the usual Christmas bumps that come with it. So, interesting dichotomy of I think consumer sentiment towards spending a little extra these holidays might not be as bad as we thought it was 3 months ago, but you know, we've kicked the can down the road so long, and we've only had one stimulus that it could be you might see a significant uptick in available real estate, let's say.
Redemption, do you have any thoughts on that?
Well, you mentioned the Christmas rally, but you also forgot to mention we're in an election year, and typically something like that is just like, it's super polarized, especially with the year that we basically had recently. It's extra fuel for the fire, but this is based on a lot of old seasonality, where whenever a incumbent president wins, the stock market continues to rally, historically. Not always. It's not a definitive thing. It's not an exact pinpoint science, but historically, if it does follow that seasonality, then we see a rally. However, the case brought forth is that because the incumbent party lost, what happens? Well, we still see that rally because we're in that Christmas time as well, but it's what happens after January is what I'm worried about, because looking at the graph when I had previously, we typically see a fall off into January and February, which is, you know, not surprising, because that's typically when stocks typically make their year's low, right? Mm-hmm. Now, in terms of things to look at, I'm not really sure, because, you know, as you guys know, I look at stuff in the dark pool, And I'm seeing prints here and there, but I really don't know what to make sense of it, and I'm thinking that they don't even know what to make sense of it either, because the typical ones that I've seen that are would be plugged in, I would see before, the typical retail stuff, the healthcare stuff, because we're in that seasonality right now, they'd be putting some money towards that. I'm not seeing them coming back in full force, and what I am seeing now recently is them moving around in the gold market, and it's not the typical they just plugged in 100 million shares into GLD or something like that. They don't do it. They don't operate like that, right? They would put it into stuff like IAU, really obscure ones like GLDM, BAR, GOLD, which is a Buffett stock as well. I'm seeing a lot of that, and I think that with all the weird politicization that's gone on, I don't know. There's some people saying that, the fight's not over, or that he's admitted defeat, that sort of thing. I don't care at the end of the day. I just want definitive answers. Has he conceded defeat? No? Okay, well, I don't know what to think now, too. And I think they're thinking the same thing. But, what is definitive is that whoever gets in the office next year is likely going to drop a stimulus. The only question is we don't know how much it is. That's the only definitive that I'm going off of. And based on what I'm seeing in gold right now, and a little bit of silver as well, I think that's probably a better play than most of these retail ones. Like, you can play the retail for the Christmas rally, but I'm looking at it from the point of view of what happens after that Christmas rally. And I think that gold, and this is just a personal opinion, but I think that gold might actually see, if not gold, then probably some other commodities out there. I'm not a big fan of Bitcoin, but I'm old school, so I'm just going with gold.
So it sounds like both of you into Q1 are thinking insolvency issues, I guess, because we're both mentioning those businesses that aren't flexible will not adapt to what's coming. And you're thinking also that there's something's going to be coming in Q1. What do you think is on their mind that they're positioning for after Q1?
I guess a lot of, I don't want to say defaults, because there are some businesses that have adapted and or are in the process of it, but that's also the problem, because I don't know who's still riding along the skirts of the government free cash loan that they thought they got or whatever, or how many of them actually adapted to say, okay, we need to go online, we need to do this. But and to add to that, in terms of brand recognition too, these no-name companies here where I live, they're complaining that these big box stores overshadow them and everything. And from what I understood, because I don't really go to that store that often, I was told that they have a very good online presence, but the person was complaining about their foot traffic, and I don't think their foot traffic, especially in their location, does as much business as their online business. So I don't know. I don't see these smaller businesses being nimble or actually wanting to change or needing to change, thinking that they need to change in order to adapt to the new world that we are possibly going to have to live in forever now.
So what I think I'm hearing is we're kicking the can down the road, so to speak.
Yeah.
From you and from Exile.
Well, you've also got another concern on my radar right now is forbearance that's been handed out. So a lot of businesses that we've had, the smaller mom and pop shop type businesses have likely taken forbearance on their personal property to help keep the business afloat when times are bad. Those forbearance payments are bearing down right now, so it's going to be an interesting. I think next month is kind of when we probably get that answer of, is a significant uptick in basically mortgage defaults that you're going to see as a result of people not being able to pay these stacks of backed up mortgage payments in one hit. going to affect their businesses, their mom and pop shops. They still have to pay commercial real estate costs and bear those. And then the other thing, going back to gold at the market level, is, gold has historically been a flight to safety, right? And now you don't have that effectively because it's tracked SPY so heavily this year. It's to me is a huge loss from an investing point of view. Like, where is safe to put your money right now? And I can only think is the markets or residential real estate. So, but that's still fraught with danger. So I think at the investor level, there's just so much uncertainty coming through this, and I'm definitely not super optimistic for the holiday period. I think the big names that were already going to have a good year, again, your Amazons and your Best Buys and stuff like that, are going to continue to, because they can profit from everyone being stuck at home or not wanting to go. And there's still the essentials they sell that people need. But yeah, I think high street level retail is definitely going to hurt in Q4 through Q1.
Their brand recognition is just nothing to be trifled with. Like, how many people have said, "Oh, yeah, you can get that on Amazon or eBay or something like that." eBay is kind of a dinosaur, but how many have said, you can get that on Amazon? It's this price or whatever, versus, like, I don't know, Joe Schmo's like Emporium down the street.
Yeah, shopping local only works to an extent. Unless you're in a very, very supportive community. Especially when brand names become verbs, then they're going to do just fine.
Not only that, to add to that, I think in the U.S., because in Canada, I know that they ended it a little bit earlier for the moratorium for rent and everything, but in the U.S., it's like end of December. So I know that I kept reading these articles and I don't really trust them, but they said that I trust the statement because I don't want to say I definitively know people, but I have a good sense of where their minds are usually at. And a lot of the surveys this site took was saying that the average consumer is very willing to go into a little bit more debt because they say that holiday spending is necessary. And that basically, and again, I'm a huge cynic. I think that people will always take the enjoyment over. I think people will take they'll always take the financial irresponsibility and stuff like that because it makes them feel good rather than actually taking responsibility for what they're doing and actually, making the mature decision and saying, maybe next time.
Yeah, absolutely. I think Millennial and I, more than most from marketing, know that you just program those people to those little dopamine presses and spend.
I'm seeing a lot of risky things along that too, where, PayPal is essentially turning themselves into a payday loan system at this point. And that's heading into Christmas season. And that for me is a big, not a red flag from the investment side, because that means that people are going to be buying left, right, and center. But as far as the health of the economy goes, it's just more debt, more and more debt, just going to keep piling on in. And you got to pay the piper. Somebody's got to pay the piper. The government can't just print endlessly. People can't just spend endlessly. There's got to come a reckoning. And I don't think that happens through Christmas. I think we go through Christmas kind of wearing blinders and thinking all is well in the world, but damn, it's going to get real bad real quick.
Yeah, I think people I noticed it was a weird thing when I left Dallas. As I was driving out of Dallas like a week ago, the amount of holiday lights and Christmas lights up at everyone's houses was like, this feels, even by American standards, a little early. And I think I sort of reconciled that in my head as people are just looking for something to celebrate, something to be happy about. And spending does that for a lot of people. I think it's no coincidence that Affirm are about to IPO. I think they're going to have a great quarter.
Oh, no.
It's yeah. I mean, it's without a doubt that has to manifest itself as people. A certain subset of people will spend recklessly at this time of year, and I think that'll be amplified by their need to have that little, a little something for them, a little happy time in what's been a frightfully miserable year for many of us.
Yeah, 2020 can just go out the window for me. I'm good. Shitter's full. I'm done. I went off this ride, as Millennial would say. But just to close up that conversation, it sounds like we're all on the same kind of wavelength. I honestly think that the piper, though, is going to be paid when no one's paying attention. I think it's going to be like, we're talking 2 years delayed. I don't know. Especially if stimulus comes through, we'll just keep on kicking the can down the road. But yeah, in Christmas, the optimism is definitely there, especially with all this vaccine news.
Yeah. I think it's interesting.
I mean, that's a big thing too. Is the positive sentiment around vaccine news right now, and then the reality that's about to hit. That irregardless of all the good news about vaccines, the next quarter, just because vaccines are approved, does not mean people are getting them. I think there's a lot of people that are going to be very shocked that we are all going into lockdown, irregardless of there being vaccines, right?
Yeah, without a doubt.
Actually, we're the most screwed because, what was it, Canada's on the bottom of the list for receiving vaccine.
Oh, you guys really?
Yeah.
We paid the least.
Oh, man.
Capitalism
Okay.
in
We
effect.
expected it for free, with that free healthcare and everything. We just thought it was global.
We knew things were not going to be good for us when they started talking about we want to make sure that all the everybody who gets vaccines, it's fair. This is an old Canadian byline of like, we want it to be fair for everybody. And by everybody, what we're trying to say is we want to not pay for our things. We just want it to be fairly socially dispersed among the masses, right? And it's like, well, this is not how this works.
Yeah.
Well, actually, I think it's evolved with the newer generation now that they want you to pay them to take the vaccine.
I saw that. I don't know. These are weird times. I don't even know how to even think about some of this stuff. But I think when you guys talk about Canada and them being last, what about third world countries? I mean...
Well, actually, they're in luck because apparently our country has also said that we're going to give our vaccines to the lesser privileged companies. Whether that happens or not, I have no idea, but the sentiment's there, I guess.
That is very Canadian of you.
Yep, I'll talk, no follow through.
You get
No.
all the policy of Sweden with the queuing ability of Britain.
You guys do know how to make a mean queue. I'll tell you that from being there. All right, so let's move on to our next topic, crypto. We saw it hit 19,000. It was quite the run. Do you think it's going to keep going, or do you guys think that it'll level off or go down? What are you guys thinking about the price and about what it means for business nowadays?
I mean, I was listening to Exile talk about all the different safe havens that people go to, right?
Yeah.
And the one conversation that keeps popping up over and over and over again is gold really the safe haven that everyone's running to? And I mean, I was not big on this digital cryptocurrency thing. Q1, Q2, Q3, I started to ease up a little bit. Right now, looking at it, I think it's hard to deny that we are looking at crypto as being a safe haven where people are storing up their cash. I think anybody looking at the rise of crypto at this point has to acknowledge that in some aspect, that's what we're looking at is crypto becoming a digital gold standard.
Yeah, I think my thoughts on crypto really, I do hold a little. I never went that deep into it, but it's fascinating, and I think really when especially in the US, when you've been quantitative easing for as long as they have, by they I mean the Fed, there's a huge risk that the dollar can't make up that devaluation effectively. So what do you do when the dollar collapses? I don't think it's an imminent risk, but I think when you get the Fed talking about inflation targeting after the better part of a year of heavy quantitative easing, print a go Bert, it's people need a flight to safety, and when gold tracks SPY, it takes it out of play effectively, for me at least.
I don't know. I've been seeing a lot of weird co-integration with. I thought it was in inverse correlation with the SPY, with gold, and yeah, like you said, we've been seeing a lot of correlation events, which is kind of weird. Sorry, in tandem events. So I just I don't know. It seems really really off-putting for me because I personally don't like crypto. Mostly because I watched it evolve over time, where it was initially just something as a meme where someone pays someone 10,000 bitcoins to send them pizza. I don't think anybody really kept it, but a friend of mine, when it was like $100, was telling me to like just sink all my money into it. And me being me, I was like, nah, I don't want to. I don't trust. I don't get into hype things. They just it's kind of like you know where you don't get into IPOs. And
well, now I am, so that's out the window.
I personally don't like it because I also saw it as its like evolution occurred, because people were saying, "Oh yeah, Bitcoin's going to do this, Bitcoin's going to do that," and you know, it went from this. Melania, you're hot micing.
Something must have happened to. Fix it in post.
Yeah, so where was I? Oh yeah, so I saw Bitcoin evolve over time, and I was there not in the initial push, but after, like, you know, when it started to get a little bit of hype. And what happened was that I just saw all these people go from like, hey, you know, it's going to be the next best thing. It's not tied down by gold or anything. We just need people to, you know, believe in it, right? I'm not a big believer that, you know, just because you believe in something, it's going to give it value. That it's a fool's errand for that. So there was that, and then it started to shoot up, and they're just like, yeah, we just need some validation or something like that, some governments or businesses to start taking Bitcoin, which we did see happen because there was one of the first houses purchased with Bitcoin, and that happened as well. Then we had, you know, the problems afterwards where people are saying, oh, you know, 51% attack. If they own more than 51% of the network, they can start reversing transactions. They can crash the network, et cetera, et cetera. So it's vulnerable. It was vulnerable to that. I don't know how much more so today, but you went from that to people storing online wallets, and they said, no, online wallets is bad because you don't own your own key, your own key, which means that people, the person who's storing it for you has your key, and therefore they own all your Bitcoin, and they can just disappear overnight, which we did see. And it's very synonymous with a lot of scams and like a lot of money laundering as well, something I don't like. And, you know, then when other stuff started happening, people started developing alternative coins, and the alternative coins, there have been some that have risen from the ashes, like Ethereum, but, you know, when these other alternative coins that failed, they kept saying stuff like, oh, you guys should have read the white papers on this. I'm like, no one even read the white papers on Bitcoin. I didn't even know that existed. It's just this one thing after another for me with crypto. It's still in an evolutional stage, but I don't think it's in an evolutional stage with more intelligent people behind the scenes. That's something I trust, because if they do something corrupt, I can play off of that. But these people, it's literally like giving, you know, a monkey a handgun.
So you inherently think crypto is mania / dangerous. Is that what you're implying?
I think it's very unpredictable, wild, and yes, extremely dangerous, because I don't know, the evolution of it just seems very not well planned through. from what I've seen, because then you got like I didn't even mention about like the splits that they had from like the main Bitcoin to Bitcoin Gold and so forth. Like I don't even know what else is split into as well.
Bitcoin Cash.
BCH. Forks or whatever.
Yeah.
So for me, I don't know if anyone remembers from my old VODs, but there was a moment for me when I saw bonds basically break off from its usual kind of, and on that flight to safety narrative, where did people go? And they're supposed to go to bonds and gold, right? And when the market had a total tantrum, they didn't go there. The risk parity trade was dead at that point. And I was trying to find out where they were going, and you saw a lot of market movements in crypto, and I haven't seen that kind of movement until the nights of the protests again. So, and when I say they, I mean, where does global money flow, right? And over the past couple months, I think the position is crypto to hedge geopolitical risk, right? Because, well, the price has gone up, but also because as you see like relationships and certain news events come out, you see it react to those kinds of events. I'm seeing lots of large players, lots of banks legitimately take large positions. The seminal moment where Bitcoin exchanges and crypto exchanges were allowed real US bank accounts. Hint, the weed industry, that took forever. And even right now, I don't think they have that. So to me, it's almost becoming mainstream. Maybe the mania is there, but I think it's right on the cusp of that moment where it is actually going to go mainstream, because there are people who are going to legitimately use this thing. Big players too. And because it doesn't really matter what the peons think, but the people who have a huge amount of money at play. And so, I don't know, it was such a seminal moment too, when you realize that basically the international money transfer system called SWIFT, if anyone's familiar with that, was considered something that China wants to move off of. So what are they going to move on to? The digital yuan. Crypto, I think this year and into next it's its moment, where it goes from that weird, dangerous monkey with a handgun thing like Redemption says to a real legitimate thing. We saw Square, its total payment volume in crypto was bigger than fiat money. We saw several companies this year adopt it and use it. I think it's at its moment. What do you guys think?
I'm inclined to agree. For me, it's when you start seeing institutional investors buying it up, and it's not just simple speculation. When their positions are sufficient enough that they're holding reserves and things like that, it becomes a much more attractive. I think that takes. It gives it stability inherently. It's a huge sign of confidence when, if Goldman Sachs says, hey, we're holding X Bitcoin or whatever other digital currencies, it gives everyone who's not on the bleeding edge a little more confidence that the people on the bleeding edge are right in their supposition that, hey, this is the future. And again, it's you've got to keep looking at these flights to safety, and the Chinese yuan isn't somewhere I would put my money. I don't buy Chinese stocks. I don't know about Chinese bonds and stuff like that. As I understand it, municipal bonds are doing fairly well over there, but it's not something that my risk appetite does not extend to investing in China, and the it's just I need that confidence level personally as a my long-term plays are all safe plays, right? So I like my risk appetite for my long-term portfolio is fairly low. So that confidence that comes with someone like a name, an institutional name saying, "Hey, this is something we see a future in now," it gives me way more confidence than it when Steve at the bar was telling me I should sink my life savings into it. So.
Oh man, I love receiving those tips from people, and I'm like, do you though know like a ton about it? But
yeah,
okay.
I'll think about it. Wink.
Now that you mention about Chinese municipal bonds, one thing that I was reading a couple days ago was that the appetite for bonds is so high that they're ignoring the fact that some of the localities inside China have decided to default on their municipal bonds, or their version of a muni bond, right?
Yeah.
And
Wow.
to me, that's kind of very, very weird, because usually a default will cause everyone to panic, especially of a governmental entity. And so I think they're desperate. They don't know where to put their money.
Yeah.
The rates are so low in the U.S., right? Where
that's got to be the truest thing that I have heard in a long time is that people don't know where to hide. The market right now is just so batshit crazy. People don't know where to hide, and it used to be easy. Shit. More's coming in. Everybody run for the ditches, right? Run for the gold trench, everybody. Shit's about to hit the fan. Everybody to gold. Let's go. And now everybody's going, well, shit's hitting the fan, but there's things that are going up, like EV, and we've got tech and these ridiculous SPACs and Chinese IPOs, and you can just make so much money here, right? And now people are going, well, do we hide in a different ditch than we've always hidden before? Like, what are we supposed to do? Well, let's look at the institutions. Well, hold on, time out. Institutions aren't everything they used to be cracked up to be. Hedge funds are barely what they used to be cracked up to be. And now all of a sudden we've got this retail sector, these retail traders, the Robin Hooders, the Davy Day traders, that are completely throwing a wrench in the work. Nobody knows where the hell they're supposed to go.
I'm just questioning where they got all this money from.
I don't care where they got the money from. They've got it. Whether they took it on YOLOs, whatever. But nobody at this point, given how quickly we saw when the Robin, the Robin Tracker API got shut down, how quickly we stopped seeing 300% gains, 400% gains on the day of some of these stocks. The institutions, the banks were in on that crap. That's not tinfoil hat conspiracy theory. That's a fact. The banks were playing that data in a big way because they recognized how valuable it was. Nobody knows the safe place to hide because there's too many moving pieces that we haven't seen before. There's just too many. And you compound that with this Yellen lady coming in who's talking about reparations, who's talking about, and each of these things in their own sense can be a good thing, but to talk about reparations and negative interest rates in the US during what we are currently having, which is a giant shitstorm, it would literally be like, well, yeah, I am sitting inside this nice safe bunker during the shitstorm. I know. I'm going to go outside with a pair of goggles and a Speedo and run around in it, right? Like there's no safe place to hide. There's not. It's gone. And the fact that we have somebody who is coming into the Treasury who is not looking to be tight-fisted, but they are looking to spend in obscenity is really startling.
I mean, in one hand, it does sort of tie back nicely to what Jerome Powell was saying. So, you've got 3 years of inflation targeting effectively ahead of us, and really the only mechanism they've got to target 2% inflation, there or thereabouts, is suppression of interest rates. So I think at this point, I mean, they've looked into the eyes of the credit monster, realized it's probably in the quadrillions by now, and gone, okay, so we've printed a huge amount of currency. What can we do to stop a massive meltdown? Because if that continued down that path, it's going to be orders of magnitude worse than 2008. They have to look at just, okay, it's inflation targeting it is, and I think if you like Jerome Powell as for his, for their economic and monetary policy, she's almost complimentary to that, but not my favorite pick. But I think honestly they just need stability for a year so they can kind of clear the air a little bit, and then find out how screwed we really are. Maybe do a little bit of curtain twitching at the credit monster again and see if it's moving a bit further away. But ultimately, I think these chickens come home to roost in 2023, 2024, and unless you can get consumers spending at an extraordinary level again, and I just don't see a way out of this. When the bond market, look at the performance of the bond markets in relation to everything else, they're terrible now. There's no reason. The yields are disgusting, and they've been snatching up junk bonds like they're candy, and all of a sudden it's like, okay, well, thanks for that. So now our bonds are worth nothing, our currency's been heavily devalued, and who pays this tab, basically, is...
Yeah. And I mean, it's interesting that everybody went quiet on the fact that BlackRock was handed the keys to the kingdom, essentially.
I know.
Here, you decide what bonds we're going to buy, and then BlackRock opts in for, oh, I know, the bonds we're going to buy are the total dog shit loans, bad loans, student loans, car loans, really shitty real estate loans. Let's buy all that up under the U.S. dollar, because we'd never touch that shit in our own funds, because nobody would allow us to.
Yeah, so give us some of those nice triple Bs.
Yeah, like Uncle Sam said, go ahead and buy things. He didn't say they had to be good. Okay.
So you enjoy... What you're saying is you enjoyed looking through that Excel sheet of what all the bonds they bought. That's what you're saying.
I mean, I live in Canada. I was fine with it. I'd be a little bit more hesitant on the optimism in regards to... somebody with a government coin purse buying up the worst shit imaginable, left, right, and center, like it's AAA rated.
Yeah.
What's the average? What is it? Junk bond yield. I think it's 2 and a something. Like.
Yeah, I just damn.
I don't know. It's I. The only reason I laugh is because I don't know whether to laugh or cry. And I think the thing that you can point to, right? We can all interpret how the Fed is talking, right? Because they can't go Chicken Little, because then everybody will panic, right? So
yeah.
What do you have to do? Look at the fact that Jerome Powell was the hawkest of hawks, meaning he wasn't wanting to do quantitative easing. He had so much time spent speaking against it, and then he became Fed the chief, so to speak, and then he stared into the eye of the monster and said, "Oh shit,
yeah, now I get
we're gonna do shit we've never done before. We are going to directly buy bonds." You know what I mean?
Yeah, give me some of those subprime orders.
Debt that has a 70% default rate. Like, guys, come on. Like, anybody out there listening to this, give me a break. If I showed up to you and said, "Here, I'd like you to give me $100. You might see 10% back on it. Maybe if they pay. Don't worry. Only 7 out of 10 people don't pay this shit." Like, who in their mind? And 10% is generous, because it's not 10%. It is closer to that 2 or 3%, right? Give me $100, and you might see $3, but 7 out of 10 people aren't going to pay it back anyway. So, are you interested? You want in on this? Nobody in their right mind. I go downstairs and I ask my 6-year-old that question. She'll be like, "That's the dumbest shit I ever heard. Why would I give my money for that?"
Yeah.
Like, come on.
Yeah, when the casino has better odds, probably not the best investment.
I don't care if they do it with a shit-eating grin either. I see it. I see it. People smiling like we are doing a good thing. This is a good thing for everybody. This is really good. It's not good. It's not good. It will collapse. And second lockdown is going to take a doozy of a whirl on MREITs, REITs, any real estate holdings, any major firms with real estate holdings. I'm not talking private residential sales, like guys that... I'm not talking Grant Cardone. I'm talking like a large REIT with thousands of properties, right?
Yeah.
Like they're boned on this. They're boned. They are absolutely boned.
Yeah, like Simon Property Group, or I think it was called MAC or something like that. Most of their business was in commercial real estate, specifically strip malls and stuff. Yeah, they've literally gotten destroyed going into COVID. But honestly, I honestly think the real solution was to just, because they kept the thing that irks me is that there's all these stupid mechanics there that prevent like a major crash from happening, and it gives them time to essentially balloon the market back up, and that's like that artificial inflation there, or sorry, the artificial prop up there is actually more harmful, because in the last video I released, I was talking slightly about the and I stumbled across this by accident, but the GDP to market cap ratio, and it was originally for 2008. Like it goes from a scale of like, it starts at 100, so anything below 100 obviously it's a buy. They think that stocks are undervalued. Anything over 100 stocks are overvalued. I think it was like 110% or something like that when I looked at it around there. But in 2008 obviously we crashed, and we went below that little ratio, below that 100. So everything was corrected, although there was a lot of bloodbaths to be had in the market. We essentially we came in, we issued buyouts for bailouts for people, for certain banks. Some of them didn't even need it, but I'm not saying it worked, but I mean the results of it for the past couple of years is that we saw something we saw it kind of level out, and then we just eventually did come back, and we came back even stronger. However, the problem with that is that when I looked at this when I looked at it back in 2008, I don't have the numbers up in front of me, but it was like 100, 110, probably 120 something percent. This time around, we're even higher at 150%. So not only do we not for a GDP to market cap ratio.
Oh, okay, yeah.
So we're up to 150% now. So we're even higher than when we were in 2008. But we didn't have that crash that everybody kept talking about and kept trying to predict or whatever. We had the one because of COVID and everything that ground the world to a halt. But all these stupid market mechanics started coming in, and I thought we were actually going to see the first time when they actually just shut down trading for the day, which would have been both hilarious and scary at the same time. But I was in puts at the time too. But I think we needed that sort of course correction back to bring us back to normality, to at least financial normality in some sort of senses. But sure enough, we didn't. What was it? The Fed came out and said that we basically are going to spend as much as it takes to keep this market afloat and everything, and it just threw a wrench in everything. And now we have an even bigger problem than we had before, had we, just let it crash and correct itself at the time.
Yeah, I mean, Powell's been playing this song on his fiddle for the last 6 months. I've done everything I can. The government needs to get their head out of their ass. It's just really unfortunate that it happened during an election season, because everybody wants the credit, nobody wants the blame.
What's even scarier is that when Rita told me that they repealed the Volcker rule, and not only that, you know the one strategy that we make fun of all the time, and that it has a huge history of never working, but people just seem to gravitate to that one stupid strategy all the time.
Martingale?
Yep. So what did we say was the only way to make that strategy work?
An infinite purse?
An infinite purse. And what did Powell just allow people to allow a certain someone to do? And they can, and because of the Volcker rule, they don't have to go find those shorts. They can just create it out of thin air. So you're basically giving them the biggest recipe to short the U.S. as much as possible. As like, you're never gonna get margin called.
That's not true, by the way. You guys are going to get margin called.
Well, I'm not the one in the room who got margin called. Just kidding. Okay, so I would love to continue this conversation, but we do have to keep going. So to our last topic, Airbnb.
I feel like this should be a contentious one.
Hold on. Let me put on my galoshes and my rain boots. If we're going to be treading through piles of dog shit, I want to make sure that I'm wearing protection here. This is nasty. Ugh.
So I'll talk.
This is the first one we're going to have a difference of opinion on.
Oh, yeah, I know. So, as you guys know, I live in Airbnbs. And this week was quite the nightmare. Well, actually last week. There's a video out there if you want to see what happened. Basically, I showed up to an Airbnb and it was less than adequate, let's say. Basically dog shit. We had a rat. We didn't have furniture in another. And, I think it's pretty fitting since they're going to IPO next week. We've spent some time looking at the S1 and I'm still undecided, to be honest. I know that seems crazy that I can get my weeks ruined by Airbnb and still be undecided. I can't decide whether it's a shitty MLM for enterprising hotelier landlords or if it's actually something that's going to become a thing. Well, it's already a thing, but a long-term viable business. I think you really have to look to the fact that 30 to 40% of all listings never get a booking. Some other interesting facts is that they did cut down a lot of their marketing spend, but when you look at when they did increase their marketing spend, it didn't really reflect as much in bookings as much as you would as kind of like a similar effect. So I think there's definitely some red flags there. I'm undecided, so I'm going to let the people that are pro and against speak on the topic.
I know that we haven't mentioned this before, or if you guys know us from elsewhere, we never talk about this, but second wave is freaking here. Nobody going anywhere. Everybody home. That's the play. Everybody at home. Not somebody else's home, because that shit ain't allowed. You go home. You stay home. You don't travel. You don't go anywhere. That's December through March of the next 4 months of your life. Nobody goes anywhere. Airbnb IPOing right now for me is insanity. It would be like McDonald's IPOing when there's no beef in the world. Like, we've got Beyond Meat. People will come for that. Like, I guess so. Like, yeah, you still sell some stuff, but if you don't have hamburgers and your place is a hamburger place, you're kind of screwed. For me, that's what I'm looking at with Airbnb is like, you're a place that doesn't even own houses. You just rent other people's houses, and those people aren't even allowed to rent their house to someone else, and the people that would have rented it aren't allowed to rent them because they've got to stay at home like everybody else. Like, the absolute worst time ever. So yeah, on the short, I'm a little bit bearish. Long run, as we come out of this thing and things open up again and yada yada yada, whatever, like 9 months, a year down the road, sure, maybe we look at Airbnb for a buy the dip, but I just ugh.
Go ahead, say it. Dog shit.
I want off this ride.
Fantastic.
To which I counter.
Uh-oh.
I actually quite like Airbnb as an IPO. I definitely agree they're late. This should have happened
a long time ago. The rumors have been around about an Airbnb IPO for, I'd say at least 18 months. I want to say longer than that even. I think they're late to the game, without a doubt. And I think really what you're seeing now is they have to IPO. It's shit or get off the pot. So I agree they're probably in for a miserable quarter. But Q4 is not ever their strongest quarter. So Q3 is historically Airbnb's strong revenue quarter. And they just had a great one. It's not the best one they've had, but so compared to 2019 and 2018, Q3, it's pretty close. I think it's actually about the same. I'd have to check, but I'm fairly sure it's about the same as Q3 2018. And then 19, they did a bunch more, and 20, given all the stuff that's transpired in 2020, they still came fairly close. It was a little short of last year's number, but they still came fairly close. So I'm pleasantly surprised at that. I honestly would have thought they were getting a kicking for Q3, and I know how much of their year's revenue depends on Q3. So yeah, Q4 is going to dip. There's no doubt about it. It's you're not going to get that. The second wave, the expanded lockdowns, yada yada yada, is all going to be a huge factor. So what a perfect time to have a huge capital raise, a massive injection of cash from retail investors, especially because their money nobody cares about apart from them. So I predict that within a year they'll be the biggest hospitality brand in the world.
Really?
Yeah, I think nobody, that a lot of people say Airbnb are like Uber. They draw the comparison with Uber, and I really don't think they are. I think they're more like Turo, except people know they exist. So, you know, Turo is peer-to-peer car rentals. This is basically peer-to-peer house sharing. And I've never stayed in Airbnbs other than staying with
you did kind
of. So I've used. I came and saw you guys a couple of times, and that's my first experience of Airbnbs. I think the problem with them as it stands is that the people who run them, they're the biggest determining factor of how good that experience is for the consumer. And you have a lot of people who, I guess, aspire to be landlords, that really should just be throwing properties out there for, you know, the conventional 1-year lease that aren't. And it's because the revenues are so much more salacious for Airbnb if you can maintain occupancy. So they don't know how to run a house as a landlord. They don't know that most of them clearly aren't hoteliers. You do not get that hotel experience. And to call back to your recent YouTube video, there's just such a disconnect between what business travelers are used to versus what Airbnb provides typically. So, but that's I mean, I struggle with that myself when I say big claims like I think Airbnb is going to be the biggest. But here's my reasoning behind it. They've got they're very asset light, right? They don't own these properties. They don't have much in the way of assets. They're very high margin, and I think you've got this long protracted pain for airlines, international travel, and stuff like that. That is not going to recover next year. I don't think it recovers fully until, I mean, I don't think airlines recover until like 2022, 2023. So I think you're going to have a huge rise in staycationers that just want to be mobile within the US and you know, maybe go see some a city or an experience somewhere else. I think they offer, by and large, better value than a lot of hotels, dollar for dollar. Which I realize, given your recent experiences, again, call back to the YouTube video, doesn't sound congruent with your experience. But I think there's so many of these places, and you know, I think it's like 7 million. It's that there's enough people using them that I think
It's going to capture the curious, the referrals go up, things like that. And I think it brings the bar up as well. As we progress down this timeline of Airbnb being a thing, the bar consistently gets raised. So with you, I know you've said, I only stay in 4.8 or higher. If that mentality spreads, it really forces people to align more with the hotel experience than the landlord experience. And I just see that brand value being so high right now that it's impossible to write off as an opportunity for me. Now I'm not going to just run out there and say, I'm going all in at IPO. I historically don't play IPOs. This year's been different for me, where I've played, I think, 6 or 7 IPOs. I will definitely be trying to come up with a price that I'm happy to enter at IPO, and if I don't get that price, then I'm not chasing it. But I see them as being COVID resilient. As long as the lockdowns aren't too widespread. Yeah, I do. I think you've got an awkward few months where everybody's waiting for a vaccine, and then we're good. I don't think it's going to be an immediate cure for the whole of the US, but I think there's enough business there for them and enough people that are willing to move around or take a vacation. It's a safe vacation if you think about it. So I would much rather be in it's a safe vacation.
Okay.
If I want to go and see a city, I don't want to go and stay in a hotel right now. I don't want to get on an airplane right now. I don't want to go and be with the public anymore. I want to be a hermit in my house that gets in a car with only the bare minimum of people and drive to the place I want to be, where there's also no other people in that house. So I don't want to share hotel lobbies, elevators, bars, things like that. So where else do you go? And to me, that mixed with the fact they've got so much brand value, which I know is a horrible marketer speak, but name me one bigger in that space.
The current branding structure is so recognizable to the demographic.
Just think of the total accessible market, guys. But I mean, so if you look, they've got supply and demand on lock, effectively, right? Who's bigger than them? Like, who's their competitors? Was it VRBO?
VRBO. They have a whole list in their S1.
Who? Exactly. So there's nobody there. There's nobody in that space.
Those are its only real competitors.
Yeah, and I don't think they're even competitors. I think they're just alternatives. They're just alternatives to an Airbnb. So they have a moat. And we, as investors, we often talk about a moat, and, it's an isolated little... It's in a world of its own. It's got global supply and demand on lock. It's almost become a verb in so much as, I'm Airbnb-ing here. That's huge. And I'm sure competitors are going to emerge, but I see it right now. I want to look at them over the course of 12 to 18 months, see what they do with the inevitable capital raise they're getting, how they use it. Through 2020, they've responded. Now, I've heard a lot of criticism of Airbnb through 2020. They haven't responded as aggressively to coronavirus as a lot of other people, a lot of other businesses. I actually think they've been just a little more quiet about it, but they're making the right moves. They've massively cut their expenditure. They took, I think, the one thing I don't like is they really ripped their marketing budget up. I think they took the better part of $1 billion off the top of that. So, but at the same time, that's a CEO that's making all the right moves to me. I've done the bare minimum of DD on them. My DD on Airbnb is a little behind because of traveling, but irony. But it's so far I haven't seen any big red flags about their management structure or their team. Like, all their C-suite seem actually competent, which is a rare change in 2020 IPOs. But the other thing is, when you see a business like that, if you look at comparative businesses, the only ones I can find examples of that have that kind of end-to-end supply and demand coverage locked down, they generally trade, it's credit card companies, and they generally trade at between 15 and 20 times earnings. revenue, sorry, not earnings. But yeah, it's the projections and that go through my mind when I just write down the basics like that are pretty huge. I've already said it elsewhere that I think it's $100 billion company by market cap fairly quickly. I'd say within a year. In fact, I've made a bet that it's within a year, so let's just throw it out there. I think it'll be within a year.
That bet. I almost forgot about it. Oh, God.
I mean, January 2022, if that's what we're talking on Airbnb, I'm with you.
Yeah.
February of 2021?
Oh, yeah. Miserable. But
okay.
Yeah.
We're talking the same thing then.
So my time frame for Airbnb, that interests me. Like, I think it'll get... they're such a unicorn, and they've got that, again, sorry guys, but they've got that much brand power that they're just going to go to the moon. If they come out at anything other than a ridiculous, if that price doesn't disgust you when you see what they release for, it's going to fly, right? It's going to come out and it's going to fly. It's going to do a Unity or a Snow or any of the other absolute nut job stocks that have gone this year. It's to the moon, right? Unless that price comes out so high, they have a reprice just before they go hot, and it's like, oh yeah, it's $9,000 a share. Other than that, they're flying. So massive capital raise going into 2021. They're definitely going to have a shitty quarter. They might take a hit when they release the next quarter's earnings, or even the quarter after that. But this straddles that for them, as far as I'm concerned. And then, hey, we're in Q2 going into Q3. That's the time frame I care about. So it is a company I would be fairly happy to invest in at the right price. I see a huge difference between them and Uber, and I don't necessarily love the experience personally, which is weird for me because I normally, I'm a big believer in liking what I invest in for the large part. So John Deere. I love John Deere products.
Tesla.
Yeah, I love Tesla. Fantastic.
Iron Mountain.
But for the large part, if I can see potential in the product or the service, or it's a unicorn of sufficient pedigree that it deserves it, then I'm interested. And this is one of those rare ones that comes along that I actually think it has enough substance beneath the surface that they stand a great chance of doing well. So it is a counterpoint, and it is fairly contrary because as we go through the DD process on them, it's there are some big concerns in there. I'm not saying for a second red flags do not exist, but for me they're nothing too serious. I'm not going into it blindly, but I put a lot of stock in Airbnb as a brand. And I just think they've got... I think as the consumer experience improves, they stand a better chance of getting some business travel. I don't think it's ever going to be like a good alternative to hotels for business travel, but I don't know. I think for the staycationers and stuff, 12 to 18 months is a perfect time frame to reevaluate them in and make the investment, look at it at 12 to 18 months and see how they carry. If that starts to look like a 5-year play, then I carry it to a 5-year play. If it's like, okay, I was wrong, this is terrible, they're making all the wrong moves, then I'm happy to eat my hat on it. But right now, I just don't see that happening. I see them being the biggest name in hospitality within a year. So that's my TED Talk.
Don't worry, mine's even shorter than that. I don't know. I'm looking at it from the outside, and I've gone through an Airbnb. They do have a lot of brand recognition and all that sort of stuff, but for the most part, I like the business model of basically you're essentially a matching platform. You're not there to provide any of the cars, although I think there is some programs for that, but you're not there to really own a fleet of cars or anything like that. You don't have to do any of the maintenance or anything like that. I did remember you reading something troubling with their insurance thing the other day. That kind of troubles me. But if they have this standoffish attitude where they're just like, hey, we just match people with their orders. We're just the middleman in between. I like that business model, but I don't like any sort of direct involvement because I think the risk to reward is a lot better as a middleman than to them take any sort of forward stance with it. The only difference between this and Uber, though, is that when the virus hit and Uber took that nosedive, I saw a lot of buying, which people thought it was crazy. When it was down like between $14 and $20, I saw a ton of buying happening there. People just thought, oh no, Uber's dead or whatever. But look at Uber today; it's a $50 stock. And I'm not saying that's all supported by Saudi money, but there is some credence to it because how many people are ordering Uber Eats? And I don't know if this is a violation or not, but Uber has some shady practices. And I had to actually Google this because I thought it was kind of strange how they would. If you've signed up for Uber before, they'll give you like a free $30 credit or $20 credit, depending on where you are, credit to go order something on them, right? But when you get to the checkout page for Uber Eats, they charge you that money anyways. And it's a bait and switch. They're hoping that you're already so hungry that you're going to say, screw it, I'm going to pay for it anyways, but I'm not going to order from Uber again. And then, they get tricked again, they're hungry, so they order through Uber Eats again. They always win with that. They are... for Airbnb, the allure is that they don't really have to compete with anybody else. Like Uber has Lyft. Who does Airbnb have with? Like what, Twilio or something like that? No, they're not. They're not in the short-term rentals. They have the other problem with certain hotels. The advantage and problem with like some of the hotels is that like most of the people I know that stay in the hotels, they stay in it because a convention is really close by to it, or it's actually even directly in that hotel. Whereas Airbnb, it's a little bit more mobile, but again, you kind of pay, you kind of get what you pay for sometimes with Airbnb, and sometimes it's, hit or miss or something like that. But in terms of price, like if I had to take a stark guess, I really think that Airbnb might come out as a $20 stock, but then with everybody dogpiling it right now, thinking, oh my god, it's a safety stock because people who are like stuck in Airbnbs or having staycations and stuff like that, they think it's going to be worth more than it is. I think they're going to try to push it up to like probably $50 to $75 when it IPOs, maybe even higher. But I personally do think it's a buy on the first day. That's my opinion. I think it's a buy on the first day, but the structure of which I would go about it would be just like a quick in and out situation. Like I would take the morning open cross, but everybody flood in thinking that this is going to be great because this is a very hype IPO. They're going to push it up to probably 75. If it comes out of 50 to 75, maybe to $100 or something crazy, and then that's you just get out from there. Like, I think that the hype around it is enough to fuel it. I mean, we've seen it with these other stocks that have IPO'd. People have, I guess,
like Snow.
Like Snow, Unity, which is utterly crazy.
Still performing fantastically though, Unity.
Corsair, which I had a huge beat on Corsair, but I didn't take it. I could have got that thing for what I think was like 1816 right at the open, but silly me.
Well, not gonna say I took it, but
But he did.
pretty happy with Corsair right now.
I personally think the hype.
Corsair.
I personally think the hype is there to take Airbnb, but only the initial. In terms of a long term, like, can I see this being held in the next 5-10 years? I think it's kind of hard to say for me at least. I mean,
Yeah.
I like the exclusivity that they have. That's one of the metrics I absolutely love. But what's stopping other people from creating their own sharing platform? And on top of that, there are some regulations that kind of impede it. Like, I think in Ontario, you can't. Yeah, in Ontario, the short-term, they deem it like short-term rentals. You cannot exceed 120 days, which really puts a cap on landlords trying to rent out their property, and even some that aren't even allowed to rent out their property for Airbnb, right? I think that's going to be the biggest handicap hurdle that they have to jump over. But if they get that cleared up, I mean, I might actually be somewhat of a believer in the long term for this thing.
Yeah, I am slightly concerned about the creeping municipal regulation and, the places that are putting these terms on. See, the way I sort of reassure myself mentally with that, though, is I look at it almost like self-driving cars, where you need the precedent to be set, and they have to go through that pain before, especially at the civic level, policy writers and lawmakers and code, it's very slow to respond, and it needs that change to be driven rather than if you look at something like the UFC, total different thing, I know, but they spent years just trying to get into these different places, and they hired people that were just good at presenting a case like, look, this isn't barbarism, it's actual martial arts, and we've got Las Vegas, so come on, get with it. And I think that's what Airbnb need to do, is that they have to do that responsive, as they've got to go through the pain, basically. They've got to blaze the trail, as it were. It's something inevitable, I think. So same with self-driving cars. They have to, they go to Phoenix, like Waymo, and they have to prove their credibility. So I that's kind of how I reassure myself, anyway.
So hearing both of you talk about the regulations and the pro and against nature of it, I think to bottom line it, I'm actually deciding in this segment that we're doing.
Oh, wow.
Yeah, I know. It seems I still need to go trawl through the S1, but I think the bottom line is, because their fastest growing segment is 28 days or more, right? That's the number one way to get them past the regulations, because that puts you in a regular rental. I don't see regular rentals of people actually living as opposed to traveling for leisure or business, under 28 days, as being something that would be prohibited, right? So I think they either have to make it as a 28-day play or more stay, or they're done. But at the same time, there's no competitor. I mean, who competes against them? No one. No one provides the ease of just booking wherever and weird places and the volume. I tried to go onto VRBO in multiple places because everyone kept telling me, well, if you have this problem with Airbnb, just go to VRBO or some of the other options. And I'm just like, there's nothing. I don't know what to tell you guys. Like, the inventory isn't there. They have a huge amount of listings, and then they call out that hosts are their bread and butter. As you said, they control the experience. So I think they have to make it as a 28-day play, or they're not really going to grow on a really long-term basis. I agree with Millennial, though. Like, we're going into lockdown, like, it's kind of batty, but I think dumb is going to dumb. Like, people are going to buy it because that's what we've been seeing, and everyone knows Airbnb is as basically a verb, Yeah, why not? We'll see. But
well, I think so. The other two things I'd throw in the hat about that is competitors may emerge in the future. That's my big risk factor. Is if someone like Zillow decides, hey, we're going to stop this. We've tried to be a real estate company, because they're moving to basically compete with realtors, which is hilarious given that their revenue almost entirely comes from that. But they're trying to give this streamlined, one-stop platform for real estate acquisition. If they decide, okay, we're going to change tack and we're going to enter the rental space, because we already do the listing, we already have every agent in the world, they might be able to just shake the tree and, out drops a turnkey short-term rental business. That would absolutely terrify me as an Airbnb investor. But other than that, I just don't see anything. Like, you can be a competitor. Like, VRBO is a competitor. Like, there's just nobody there. And is one likely to emerge in, 1 to 5 years? I really don't see it. So, And again, I think having a huge capital raise for them opens a lot of things. Factoring the even when their C-suite is taking pay cuts and stuff like that, to me that shows belief in their business. But when they can then go, okay, so this is how we need to improve the experience of what we do, then you put together packages and you help your hosts be better hosts, and voila, you've got an improvement that took the marketing department 3 months to craft and deliver, and now you're actively engaging your hosts and saying, hey, do this better, do this better, do this better. We've the feedback loop is very real there. So I think there's also huge potential for them to improve, and the fact they're doing this well before they do that is huge to me.
I mean, those are great points. I don't know which way to go. I don't know. We're going to have to discover this more. We're going to have to talk about it more, but I'm going to end it there because we have covered a lot of topics. Hopefully this was useful for everybody who's listening, and that you like talking with my crew as much as I do. Yes, I've done you as my crew, so deal with it. Anyways, we'll see you guys in the next one. Hopefully, it'll be great. See ya.